Hi, my name is Lenard. I'm from Advisir, and today we'll be presenting some insights regarding the $800 billion fund of mum and dad investors. And at the end of this session, you'll be able to take away 3 key insights that all resources companies need to consider when thinking about communicating and accessing that $800 billion fund of mum and dad. So if we have a look at Australia in aggregate terms, 1 in 6 investors now trades and manages their own superannuation through their own SMSF. In aggregate terms, if we add up the total value of these mum and dad investors, it equates to around $800 billion of investment firepower currently circulating in Australia. Now, to quant that in bigger terms, that's almost 6 times the size of Australia's future fund. So quite a significant amount of firepower that is lurking around the ASX and the other exchanges. What we did earlier this year is we undertook the world's largest survey of retail investor sentiment anywhere in the world. And what we ended up taking away was over 500,000 data points of understanding how investors think, what motivates them, and some typical kind of behavioral finance fundamentals that we then used to formulate some of our key insights from the survey. One of the real key takeaways that we found when undertaking this survey was that astonishingly, around 75% of investors actually had very little to no confidence in terms of, understanding the investment decision that they're about to make. So before we move on to the next series, the 3 key highlights that we really wanted to call out was singling where a majority of investors source their information from, how much typically they have to invest, and what generally makes them invest. And I think you'll find some of the findings were quite surprising. So when we actually have a look at where people get their information from, the traditional methods of communication, it probably shifted, certainly in the last 5 years. When we have a look at news sources, what we found was that investors typically find their investment information and help develop that investment thesis from online forums and from company websites. So certainly a critical element to consider when you think about the last time you updated your company website. So the interesting thing for a lot of these decision support platforms is that you need to jump on the front foot of controlling the narrative rather than the investors doing so for you. So managing your online digital reputation is key, and particularly key when thinking about investor sentiment. Every other source of information, particularly traditional forms of media like print media and newspapers, have certainly seen a shift in the last 2.5 to 3 years in terms of understanding where the communication mediums sit. But despite this, I think, coming back to the point around newspapers, many boards and management teams still think that newspapers, roadshows and presentations are really around where your investor story gets heard. And what we're finding is this is no longer the case. Obviously not in the case of Minds and Money, but certainly one worth considering when thinking about how you're communicating with your investors. So the so what effectively here is that boards and management teams need to understand that they'll reach thousands more online, and they need to have a comprehensive and engaging online strategy. Moving on, secondly, one of the key takeaways that we asked investors was how much typically do you have to invest? Now, those small investors, and we found, the vast majority typically were liquid around $500,000 to $1 million. But really surprisingly, that most investors, when thinking about investing for the first time, will typically only invest between $2,000 and $4,000. So whilst these investment amounts are considered quite small, a quarter have quite a significant amount of firepower and capital to typically invest. So understanding the potential of your current register is really critical, and often one that is overlooked by boards and management teams. The focus is often on attracting new investors and is not as often as effective as increasing the share of wallet with existing investors. So often your mum and dad investors as well are quite overlooked, and often the focus for many junior explorers are really around generating institutional investor interest, whilst we look at it from the perspective of mum and dad have still got plenty left in the tank. So the so what here is really think about mining your register and understanding those small parcels. Some of them can be pain points for many CEOs. Really, they can turn into much larger investment opportunities. So there could potentially be a lot more investment in your register than you think. So when it comes to small caps, certainly don't underestimate the little guy. Now, lastly, this is a really interesting one around what makes mum and dad investors think about investing, and particularly for resources companies, this is probably the fundamental key. What we've found is boards and managements are often focused on announcements and news flow to drive their investor activity. Announcements, whether it's products, resource estimates, essays, JORC results, or new discoveries, are actually the least important factor for resources. I think, with the exception of you find gold, fantastic. But I think, looking at the 6 key thematics on the screen there, the one that really stood out, and an overwhelming 40% said the people and the management team are really the driving factor when thinking about investing in a particular business, followed obviously by the historical performance of the stock price. So the so what is your company story is a people story. So certainly don't hide away in the bushes. I think bring the capability of your people, your management, and those that are working with the team to really bring that story to life. So tell it well, and underpinning that is a really authentic people story behind the business. So in summary, I think, again, the really a very abridged version of what a digital playbook for engaging with retail investors is that there is a huge cohort of mum and dad investors out there with a significant amount of firepower. They are online. They do not get their investment information from newspapers anymore. So understanding your digital proposition is key. Investors initially invest a little, but there is a lot more in the pot. So always when you're thinking about your investor communication strategy, consider your existing investors, and often the story is very different to reappealing to those cohorts, as well as new investors. And remember, majority of your announcements are written by geos for geos, and it's not your grade, it's not your resource, it's actually your board and your management team that really drive that engagement. So at its core, it's absolutely a people story. So lastly, in summary, Dr. Katrina Kaminsky, who was running the Laboratory of Financial Engineering at MIT, said that financial markets are made up of people, and human decision-making can be complex and contextual. So definitely keep that in mind. And if you'd like to know more, get in touch. We'll love to send you a copy of the detailed version of the digital playbook for resource investors. Thank you.